Welcome back, welcome home. It's Justin, your local real estate agent. I hope you're having an excellent, wonderful day. And today, we got to talk about these interest rates, y'all. So, this is the first video in a series we're going to have focused specifically on interest rates and what we can do to deal with them. Historically speaking, we're kind of like in a normal interest rate environment, but since the end of 2008 to a few months ago, we've been in a low rate environment. We've adjusted to that collectively. So now we kind of got to readjust and see what strategies we can use to help ourselves in this situation. So we got a great strategy that you can use on the buying side, and this will be a benefit to sellers and buyers when it comes to dealing with interest rates and making sure all parties can leave a transaction satisfied. So before we get into that, let's do our quick market update around the Bronx. So as you can see, last 7 days, we got, boom, 36 new listings. 9 homes went back on the market. So they were either, in contract, maybe the deal fell apart, party backed out, or they were temporarily off the market and came back. 27 price decreases. Okay, market shift alert, 27 price decreases. 18 went into contract, 8 are temporarily off the market, 47 expired. 47. Now, we don't know why all these 2 to 4 family homes expired in the Bronx in the last 7 days, but a lot of times properties expire because of price. So keep that in mind. We got 1 coming soon, 10 sold, 6 canceled. All right, boom. So let's go because you're going to see a trend. Single families, 24 new, 6 back on the market, 2 price increases, 28 price decreases. Okay, 7 in contract, 3 temporarily off the market, 19 expired. 1 coming soon, 15 sold, 5 canceled. You getting the trends? I'm highlighting the decreases and the expireds because that's giving us a great sense of where we are. Look at the decreases and expires relative to what else is going on. So condos, 8 new condos on the market, 4 back on the market, 1 price increase, 6 decreases, 6 in contract, 1 temporarily off the market, 13 expired, 8 sold, 1 canceled. And co-ops, our frenemy. 23 new co-ops on the market, 9 back on the market, 1 increase, 22 price decreases, 9 in contract, 8 temporarily, 24 expired, 11 sold, 7 canceled. So you can get a sense of where we are. Now let's start talking about these rates. Boom, we got this little New York Times article. Mortgage rates jump above 6% for first time since 2008. Okay, so we're all aware. Now here we got a little calculation going on here. I'm just typing it in, today mortgage rate. And this is giving us yesterday's date because that was Friday. But look, loan amount 700, 20% down payment, New York, credit score between 719. Look at the rates we're looking at for these fixed products, okay? Now, of course, this can adjust, right? If you have a lower credit score, rates go up. Loan amounts can affect it, down payment, where you purchase. So, there's a lot of variables. Talk to your lender. Big tip, talk to your lender. And if you've been looking for a few months already, maybe you start looking in, June or May, and you haven't found what you're looking for just yet, or you just got something accepted getting into a deal, talk to your lender now to make sure that those numbers still work because they gave you that pre-approval based off, a lower interest rate. Your pre-approval may have shrunken over time, and that property you're looking at might not fit in your budget at the moment. So definitely always stay in touch with your lender, especially when we're in an environment like we're in now. Okay. And more interest rate news you didn't want to hear, but I got to keep it real because this is the real on real estate. The Federal Reserve looks almost certain to deliver our 4th straight big interest rate hike next month in November. Okay, look, boom. This is from yesterday morning. Okay, so now we're dealing with all these rates. Buyers are upset because it's more expensive to purchase a home. There's not a lot of homes and prices are going up, right? Sellers are upset because, hey, these rates are cooling down demand. Our homes are sitting on the market longer. They're not selling for as much as we saw our neighbors sell their house for 6 months ago or 12 months ago, or maybe not. Maybe they might be selling for more, but it's not the big jump that our neighbors experience in price that we're looking for, right? So what do? Seller subsidy is one thing that we can do to help both sides. So what is a seller subsidy? Great question. So now let's say we're purchasing a home, $700,000. We in New York City, so you know the vibes. So $700,000, we're gonna put down $100,000. Our loan amount will be $600,000. Just trying to keep simple numbers here for me. A seller can say, hey, I know you're taking out this big loan, interest rates have gone up. Why don't we do this? Will you say, hey, I'll take another 3% of the loan amount that I'm borrowing. So 3% of 600,000 is 18,000, right? Another 3% on top of the $700,000 purchase price. So now we're gonna be at 718. As long as a home is worth at least $718,000 in the eyes of the appraiser, you can take that $18,000 and you'll give yourself a temporary rate reduction for a year to 3 years. Right, 1 year, 2 year, 3 years, depending on how you want to do this. There's different ways you could break it up. Again, talk to your lender. Why is this beneficial to you as a buyer? Buyer, it's beneficial because you get a temporary rate reduction. That means your monthly payment for a year or 2 or 3 goes down because your effective interest rate is lower than the note rate that you were given. Okay? Now, hey, it's only a few years. Why would I be interested in that? Great question. What you may be able to do in a different interest rate environment, hopefully in a few years and rates have gone down, is refinance out of the mortgage that you have now or you're going to get soon and refinance into a mortgage with a much lower rate. A couple of factors may have happened. Maybe it's your credit score and your credit score has shot up significantly the last year or two. So now you qualify for a lower rate. Rates have gone down in general. Another factor that we should also put in is a lot of us don't have the 20% to put down when we're purchasing a home. That means we're buying with mortgage insurance a lot of times. Really not a benefit for you. If you can get that 20% equity because you fix up the house, the home values went up in your neighborhood, you paid down your mortgage, and you have that extra equity now and hit that 20% mark, and you can refinance to get rid of the mortgage insurance, save yourself a few extra $100 a month on that end. Plus you have this seller subsidy that gave you a temporarily lower payment, and now you can get a lock in a lower rate for the long term. That's a 2-for-1 win. We gotta do it if we can. Okay, so that's for you on the buyer side. Sellers, why is this seller subsidy something you'd be interested in? Hey, we're floating prices that prices keep going up. We want a buyer for a home. If they can see a temporary break for a year or 2 or 3, this might make our selling price more attractive to them. Okay, so we're going to give a little bit of equity because maybe we have a tough time selling it. We've seen lower demand. There's still, in general, a seller's market, but it's not the super seller's market that we were in even just a few months ago. So we want to give them this a little edge to help them out, and then we can get our property sold and priced in terms that are agreeable to us. Okay, so I mentioned one big thing there was the fact that you got to look at the value of the home. We got to make sure it appraises for that extra amount. It's basically like a seller's concession. If you don't know what a seller's concession is, I'll drop a link to another video we did on that on those already. Okay. Other big thing, buyer, for you to be aware of is your lender must approve you for the loan based on the note rate. Let's look at an example. And of course, a big shout out to Sharifa Parkinson from Canyon Mortgage, an excellent top tier mortgage broker who I've had the pleasure of working with multiple times, who has given us this detailed breakdown of different seller subsidy scenarios. Note rate here is, let me go down to 2-1 example, because I like that one a lot, is a 7% interest rate. That's your note rate. Okay, we're doing a 2-1 buy down. That means in year 1, instead of making a payment with a 7% interest rate, and this is only based off a loan amount of $100,000, so if the loan amount is higher, you're going to be saving a lot more money. But I'm keeping simple numbers so I can give it to you as real as I can. All right, you're paying $665.31 with a 7% interest rate. Boom, if you have a 2% rate reduction at 5% interest rate, you have $536.83, saving $128.48 per month for that first year. Add that up, I don't know, it's coming out to what, $1,400, something like that in annual savings. Year 2, you have a 1% reduction on the note rate. So instead of the $665.31, you're only paying $599.56. $65.75 that you're saving on the principal and interest. Well, really just the interest, but your principal and interest payment is $65.75 lower per month. That's like $700 or something in savings, right? You add those two up. There's math down there. I didn't even need to do it. You add this up, what? $1,541.76 saved in year 1, $789 saved in year 2. Look at the total savings, $2,330.76, right? And then hopefully after year 2, you can do that refi, get rid of the PMI if you had it, and lock in hopefully a lower rate. But a lot of it's not just the market, it might be also your specific situation. okay? Because maybe, like I said before, your credit score is going up. Maybe there's more equity in the house. Talk to your lender to see. But this is a great way to ease that transition into owning or getting that new property. And then hopefully we have at least one exit strategy available to us on the back end, right? And if we don't have it, remember the lender qualified us off the 7% interest rate. So technically we're still good for the length of the loan that we have. Okay. So this is a big deal. You can split this up in different ways. It doesn't have to be the 2-1 buy down. It could be a 1-1, a 1-0, a 1-1-1. Talk with your lender about the different ways that you might be able to do what we call a seller subsidy. Sellers, your agent should be talking to you about this, especially if you're having a tough time with the sale. This might be something we can use to attract buyers because rates are what everyone's talking about right now. Okay, so definitely talk with us about this specific situation, and we're going to have more different ideas to help with these interest rates going forward. It's going to benefit both sides of the transaction. All right. So of course, before you go, drop a like, share, follow, comment, whatever platform this is on. I'm old. I say Tic Tacs from time to time. It's not Tic Tacs. I know, but I'm old. So do that. Any questions about seller subsidy, reach out to me. I know a ton of lenders that use these frequently, so they can speak to you in great detail. Remember, the numbers here are based off 100%, $100,000 loan amount at 7% interest rate. I don't know, unless you're buying like a co-op or something, or you got a big down payment for a condo or house, you probably got a lot higher loan amount that we're looking at. So these numbers will be bigger. That means more savings for you. Okay, so definitely important to check that out. And talk to you soon. Have a good one.